All right, ladies and gentlemen, we are back at it again, bringing you a brand new supply and demand trade review video. I love doing these intros, baby. We are going to have a look at my trade review, and on top of that, we are going to look at one of the members' trade review, mark out the pros and cons so you guys can learn. If you guys do trade the supply and demand methodology, I strongly recommend you stay tuned for the whole video. You will learn lots, and if you are brand new to it, I strongly recommend listening to the whole thing because you will pull things out of it. And actually, one of the cool things that we're going to talk about today is the public sentiment. This is something that we've been playing with the private group. I made a big post talking about it in our backtesting tab because I marked out the last 20 trades that I took, and I was curious to see if I'm trading with the public money versus against the public money, how is my win rate? You know what I'm saying? So if the public money is like 90% long, usually the market is going down at that time. And what I was trying to figure out is if I'm trading on the public side, we always know that the public loses money. If I'm trading on the public side, is there a win-loss difference to when I'm trading against the public? You know what I mean? So let's actually dive into that. We're going to look at Pound Aussie. Shout out to Caleb for posting this one. I normally do not trade Pound Aussie, but I saw the setup that he posted, and I'm like, you know what? I love it. It reminds me of Pound CAD because the Pound CAD was actually a pair that I was trying to get long down in here, but we never actually got the pullback here on the 4 hour time frame. I believe I don't think I made a video about it, but I made a video on TradingView about it, as well as a Twitter post. In fact, if you guys don't follow me on Twitter, check me out on Twitter, Moneyball Austin. All right. So this wasn't a trade that I didn't get filled on, but I was trying to buy down in here because we are clearly in a sideways range, pretty much, right? Sideways range, we're back low, where buyers have previously taken control each time, once, twice, three times, four times, five times, six times. So potentially with it sixth time down here, the buyers have stepped in every single time. I'm going to be looking for buying opportunities, and that's what I was trying to do down in here on the 4 hour time frame. I never got the pullback. So then that's when Caleb posted Pound Aussie. He posted this trade down in here, this 4 hour drop based rally. Let's have a look at the trade review because I am out of the trade now. It was a quick 1.5 to 1. This is not a normal pair that I trade. Let's talk about Pound Aussie, and in fact, let's just jump to the sentiment. As of right now, of where the current market is, you can see that right here, Pound Aussie, public money, it's 56% short right now. And long, it is 44% long. All right, and actually, we could quickly look at Pound, say, let's look at NZD USD, and you'll notice when the public is buying a lot, or in this case, they're short a lot, the market is most likely going up. All right, and we can look here on the daily, it's been going up. Now this chart is scrunched down, so it really doesn't do it justice. If we have a look at Pound New Zealand, this is going to be a fantastic video. Where is it? 87%. Oh, that's Pound New Zealand. We need New Zealand USD. This thing has been going up nonstop for the last week, right? Yet 87% of the public is short. So usually when you see a big difference, kind of the number that I was using was 75%. I can make a whole video on this. I think I actually will make an in-depth video on this about how to trade or how to analyze the public sentiment, right? What's the public side on? Are they long? Are they short? And where's the market going? Because usually it goes the exact opposite when it's a high number. In my opinion, anything over 75%, when it's hovering around like 50-50, 60-40 or whatever, the market is generally just going sideways, right? Not much volatility, just going sideways. And you know what? I like trading those markets. But you know what? When I see this short, public money is 87% short, you're always going to see this thing going up most of the time. All right. And when they're going long, most of the time it's going down. They're always taking the opposite side of the trade of where the market is actually going. So this is exactly what I was doing in the Pound Aussie. I could talk about this for 30 minutes. I think it would just be better for me to make a video on this. But what we noticed was it was really like a 50-50 split, and that's okay. So in this case, 50-50 split, it's okay to be looking for buying opportunities. Now, if it was like long 80% or here, long 80%, then I probably do not want to be taking a long position, right? Because the market's going to be continuing down potentially. So if we look at that trade review, we knew it was hovering around, at the time, it was like 66% long, I believe. And that was okay for me. It didn't breach that 75% long. and this allowed me to take the trade. It had a very strong leg out. We were removing areas of supply. We broke downward trend. This was an indication that price was starting to turn from inside out, right? And then I just bought the pullback down in here and then got out right before this opposing drop base drop supply zone. As you can see right here, price broke downward momentum, price removed pivot point supply zone, quality score. Sentiment was 66% long, which is good because it did not cross the 75% threshold that I was determining if it's public money or non-public money. And then I use smaller risk because I normally do not trade this market at all, or I don't normally trade pound Aussie. Okay, so that's my quick trade review talking about the sentiment. Like I said, I could dive into this forever. I think I'll make a video on this, about a 15-20 minute video explaining the whole sentiment and how you could use it in your trading to create a better edge. Now, would I simply just take the opposite side of public money? No, but I think it's a tool that you can use to increase your win rate, potentially you get bigger risk to rewards, and be aware of what the market might be doing, right? But that's for another video. I think that would be a fantastic video. If you guys would like to see it, let me know. And hey, if you guys are enjoying the video so far, don't forget to hit that like button, comment, subscribe. I always appreciate when you guys leave a like and a comment and subscribe with those notifications. It really does help with the YouTube algorithm, gets the video out there more, and it encourages me to make more videos. So I really do appreciate that. And I hope you guys have a wonderful day. All right? Always puts a smile to my face when you tell somebody that. Have a wonderful day, mister. So that wraps up that trade review. We are going to pop over to the members trade review and have a look at AZ's trade. My friend from Hong Kong, Mr. Hong Kong, we call him, teaches me Mandarin every meeting that we have as a group. All right. So this was a trade that he was taking on in the crypto market, and I wrote out this post talking about the pros and cons, but I thought I'll just explain it instead of me reading it off. All right. So this was a trade in the crypto market, AXSUSDT, no idea what that is, but he was using multiple time frame analysis, waiting for prices to come back into an area of interest of where he saw buyers step in before. And clearly, we can see a large stack of buyers did come in on his 4-hour time frame with this big candlestick right here, right? And this whole big move really originated from this order block right here, this rally-based rally, all right? I agree. I think it's totally cool to be looking for buying opportunities if and when prices pull back into this area of demand, right? Now, one thing that I would have to knock down on this trade or on this demand zone is the amount of time going sideways. 1, 2, 3, 4, 5, like 12, 15 candlesticks are going sideways, and then you have the leg out. If you think about it, if there was a strong imbalance in the market, do you think that price would stay a short time or a long time, right? It's going to spend a short time most likely. If there's a strong imbalance, it's not going to spend much time, right? Exactly down here, not much time. Prices dropped, base, base, base. Very strong rally, right? Very strong rally. In this case, prices went sideways for quite some time. And then even when prices came back into it, look how long it took for prices to do anything. It finally broke it, but this isn't really telling me that there's a strong imbalance in here. I think it's cool to be looking for buying opportunities when it first came into it, but this is a 4-hour time frame and it's spent like almost 2 weeks here. A week and a half, 2 weeks going sideways in here inside a 4-hour demand zone. That's a lot of time. That's telling me that there's not a significant amount of buyers sitting inside that original zone. So those were the 2 points that I was letting them know, like, hey, you know what? The trade looks good, but the only thing, in my opinion, that could be better is the less time that it took to create the base of the demand zone and how much time spent when it went back into it, right? Like I said, if there's a strong imbalance, it's not going to spend too much time, right? And this goes for any time frame. If you're trading a daily time frame, it's like, say you have a daily rally-based rally, and then price comes back into it, and it spends like a month in that daily demand zone, or 2 weeks or whatever, then it's probably not the best demand zone in my opinion. If there's any strong buyers in this area, then it would have stepped in already. You know what I mean? So that's kind of what I was thinking over here. A lot of time going sideways, and that's my thoughts on this trade. That's basically what I said. Higher time frame could have less basing candles. Remember, if there's a strong imbalance in between buyers and sellers, then price will not spend too much time going sideways at the base. And then I went on to say, from studying my Mandarin in the Sundays and Wednesday meetings with you, this appears to be a 4-hour time frame, smiley face. A lot of time is spent here going sideways inside the higher time frame. So yeah, basically exactly what I said. So something that he'll bring out of this from this trade review that I gave him is less time creating the zone, and once prices go back into the zone, right? You don't want too much time in there. Okay. So that's going to wrap this trade review video up. If you guys want to know more about the supply and demand methodology, check out the free mini course I have in the description below at moneyballtrading.com. I cover the lessons, supply and demand basics, in a 20-30 minute video. Then we go on to multiple time frame analysis and trends. And then we have a look at the weekly prep and the trade reviews, right? Literally. I just take a copy from that, I believe, from the 2 meetings, and I just put them in a video for you guys so you guys can kind of get the gist of what the Discord group is about. So, hey, that's going to wrap up the video, guys. Thank you so much for watching us. Don't forget to hit the like, comment, subscribe. Bye-bye.